So, ladies and gentlemen, I want to welcome you tonight. This is our fourth installment. Thank you for coming. Thank you for signing up. I appreciate your willingness to help us out in this process. This being your fourth installment, the previous class you had Town Administrator, Select Board, Fire Station, and then you had a whole list last time, including affordable housing, land use, planning board, zoning board of appeals, health, etc. So many more to come to. Public works, senior center, recreation, a good amount of other classes are going to be coming. We also have pre-town meeting and then the actual town meeting, which is November 12th. And then we get right into budget season, which is always my fun part. My name is Todd Lindmark. I'm Finance Director. Click on that. So the agenda tonight is up on the board. I won't read through it line by line, but that's kind of a good amount of material that we're going to be covering as far as the different departments. Myself, I'm in the accounting department as far as the Finance Director. I also oversee Treasurer Collector's Office, Treasurer Collector Daniel Vicente. I also oversee the Assessor's Office, Chris Menschel. Included in the Treasurer Collector's Office is Sarah Hillary. Karen Tripp couldn't make it tonight. And then in my office, I have Tracy Davis and Robin McDougall. And in the Assessor's Office, we have Nancy Centrala. And John Adalio couldn't make it tonight either. Those are the people. We'll go on the next slide, which kind of goes through those people. So you can just click through those. So again, in the accounting department, the three of us, the assessors department, those three, and then the treasurer collector department, we have three people. Throughout the years, the numbers have dwindled. We've had more people in each of the different departments, but through budget constraints, we've learned to work more with less, as they say. Next slide. In case you want to contact us, here's our contact information, telephone numbers, email addresses. In the full presentation that'll be provided and uploaded, this slide will be there so you'll have it. It's also on your presentation worksheet that you have, but I don't think you can probably read it. It's kind of small in the little graph there. A couple of things before I continue on. There was a couple of questions from previous meetings that I wanted to kind of address as they were presented and didn't have the information provided. One is in regards to the solar field and how much is the town getting on that. With respect to the solar field, which is up on Pond Street on the right-hand side, just before the horse and carriage and after the recreation complex. So with that agreement, we have a 30-year lease with NextGrid. That lease started last year before, and that's currently a $40,832.23. It escalates 3% per year, currently $43,319 that the town receives for the lease. And that goes to the water department because it's the water department land. The taxes that are attributable to that property is currently about $20,500 roughly, just under. And then we also have a stipulation in the agreement, $200,000 payment, $100,000 was up front, which we've already received, and then $100,000 when the project is completed. So that addresses the solar field. What's the difference between treasurer, collector, and finance? Treasurer collector's office and finance department work closely together, but do have distinct responsibilities within the town. Treasurer collector is primarily responsible for town's cash management, revenue collection, includes collecting real estate, personal property, motor vehicle excise taxes, as well as water, wastewater, and other municipal payments. Treasurer also manages the town's banking relationships, cash flow, debt, investments, and safeguarding and tracking the funds that come into the town, ensuring they are properly deposited, invested, and dispersed. Finance department, mine, often referred to as more broadly as just finance, oversees budgeting, which part one, this is just the simple budget. The more detailed budget, operational, I put a booklet back there, which has the FY26 operational budget. Also back there is the FY25 capital budget, which was last year's capital budget. This year's capital budget typically is not finished until after we have town meeting when everything's finalized. So that'll be forthcoming, the FY26 capital, but I do have copies over there for you to look at. This includes preparing and monitoring the annual budget, processing vendor payments, payroll, maintaining the town's financial records, and ensuring compliance with accounting standards, state financial regulations. Finance Department tracks how funds are allocated and spent. Treasurer basically focuses on inflows, finance is on the outflows. Both function interconnected as we do have checks and balances on each of our departments, especially cash reconciliation. Banking is done in the Treasurer Collector's office. Reconciliation is done to make sure that those records match. Then it's matched with mine that details into the general ledger. That then once a year gets approved at the state level with the Division of Local Services to then provide us with our free cash certification. We probably heard that term quite a bit. Free cash is the monies that the town has available, similar to retained earnings from a corporation standpoint. And the last question I have, do electric vehicle charging stations on municipal property create income for the town? We do have some charging stations which were part of the fire station project. That was part of the monies that were included in the project that we are receiving monies, roughly about $125 per month right now. But obviously as they get more and more utilization, there are 8 stations over there, 1 or 2 are used at any given time. Welcome. There's materials on the back table if you want to grab, and there's a C right over here, over there.
Can I ask a question, Tom?
Sure.
MBTA's Community Act, how much money have they given us since we passed it?
MBTA,
Community Act.
we have not received any monies as far as...
Okay, cool. I was just wondering, we passed
Yeah.
the thing and they haven't given us anything yet, so just wondering.
Yep.
Cool.
Not cool, but yes.
Cool.
All right, so I've addressed, I think, all the questions. Any questions at this time? Hope everybody's writing down all the answers because there will be a quiz at the end. It's going to be 25 questions, multiple choice.
Get a tax break if we get 100?
If you get 100, yeah. There are questions in there I don't even know the answer to, so we'll get to it though. All right. As I said in the agenda, we're going to give you an overview of each of the different departments, what we could kind of do, don't do. And then there's some videos that are going to be in between. These videos are short, about 2-3 minutes, 4 minutes maybe max, but it's going to help you understand a little bit more of the finer intricacies of what actually, how this town operates, works. You know, where's the tax levy, how's that considered, things of that sort. So go ahead. You might have to do the volume.
Proposition 2.5 is a law enacted in 1980 by voter initiative. It went into effect for fiscal year 1982 and dramatically changed local budgeting practices because it constrains or limits the annual property tax levy. To understand how the constraint works, we must define 3 terms, what we refer to as the 3 building blocks of Proposition 2.5. 1, the tax levy, 2, the levy limit, and 3, the levy ceiling. The first building block is the property tax levy. The property tax levy is the revenue a community raises through real and personal property taxes each year when it sets its tax rate. The property tax levy is the largest source of revenue most municipalities have to fund their budgets. Therefore, any constraint on the levy has a substantial impact on a community's budget. Budgets adopted before Proposition 2.5 were often driven by departmental spending requests with limited coordination among local officials and little attention paid to other local revenue sources, such as charging fees to users of local services. The reason was that property taxes could always be levied at whatever amount was needed to balance the budget at the time the tax rate was set. Proposition 2.5 fundamentally changed this process. Now, budget decisions must be made within a specific revenue estimate. This has generally led to greater coordination and better defined budgeting that considers the current and future needs and financial goals of the community. Proposition 2.5 established 2 types of limits on the annual property tax levy. 1, the levy limit, and 2, the levy ceiling. The second building block is the annual levy limit. The levy limit is the key or primary limitation established by Proposition 2.5. It is the maximum dollar amount a community can routinely levy in any given fiscal year. That is, it defines the maximum amount of property tax revenue a community will ordinarily have to support its annual budget. The third building block is the annual levy ceiling. The levy ceiling is the maximum amount the levy limit may be in any given year. It is a constraint on the size of the annual levy limit. To summarize the basic concept of how Proposition 2.5 works, we start with the basic building block of the annual property tax levy. The tax levy must fit within the annual levy limitation block, and the levy limit must fit within the annual levy ceiling block. The Department of Revenue is responsible for determining the annual levy limit and ceiling for each community and ensuring the tax levy fixed by the setting of the tax rate complies with Proposition 2.5.
All right, so that's Proposition 2.5. Everybody's kind of heard that terminology at this point. 2.5 is a 2.5% based on last year's amount that we can increase at a maximum amount. And then we add on to that new growth. So if we have new growth, new buildings, new houses, new developments get captured into the new growth numbers. That new growth, which is historically been around $500,000 roughly, that is added on to the 2.5%, which then allows us to say, okay, this is what we have to build our budget around. Any more has to come from local receipts. And any local receipts would then have to make up any differences. Because again, as a municipality, we always have to have a balanced budget. We cannot deficit spend. You had a question? No? Yes? No?
Have to leave at 6
I have a question.
p.m.
Yes.
So how long have you been here? Did you start with finance? And what certificate and degrees do you have in finance?
Me? So
Yeah,
I started
because
here.
you are in charge of finance.
Yep, I
Okay.
started here in June 2016. So I have, let's see, undergraduate from Stonehill College with accounting, and a minor in information technology, a master's in taxation at Bentley,
Okay.
and then I have my law degree from Roger Williams. I'm also a certified government accountant in the state of Massachusetts. I'm MCPPO certified, which you probably heard that terminology, which is Massachusetts Certified Public Procurement Official, MCPPO. And what else do I have?
That sounds good. I just wanted to make sure. That's all.
So I do also have a certificate. There's a program that is offered through the municipalities, through the college, and it's a certificate basically in management. So I also have that as well,
Okay. Thank you.
along with a whole other list, but
Thank you.
we have
I have
time.
questions.
Yes.
So, I think we're all fairly familiar with Proposition 2.5. But, I don't know if this is the right time to ask this question, but when we do a bond, right, you and I talked about the bond for the fire station, for example. The bond, isn't that an override that is a limited time
Correct.
override? So it's not covered by the Proposition 2.5.
Right. So that's a debt exclusion.
So it's called a debt exclusion, but really, it's a
There's more
temp.
videos coming.
Okay.
Don't take away my thunder.
Okay. I just wanted to
But to give you
clarify.
all, the answer to number 10 is going to be C. Just write it down, because there is going to be a quiz. Got to pay attention. Any other questions? All right, we'll go to the next one.
As we said previously, the levy limit is the maximum dollar amount a community can routinely levy in any given fiscal year. The key to understanding how the levy limit is calculated is to understand that the limit is an historical figure. This simply means that the levy limit for any given fiscal year is based on the previous year's levy limit. The amount actually levied in the prior year is disregarded in the computation. The levy limit base is what the community could have levied under its levy limit, not what it actually levied. The first step in calculating the new levy limit of any year, then, is to begin with last year's levy limit. That limit is increased by two factors. The first factor is an automatic 2.5% increase in last year's levy limit. The second factor is what we refer to as new growth. To illustrate the basic levy limit calculation, let us say that last year's levy limit was $100 million. That $100 million base is first increased by 2.5%. In this case, that would be $2.5 million. Next, we add the dollar amount allowed as new growth. Let us say, for illustration purposes, that our new growth factor is $2.5 million. That gives us a subtotal or preliminary levy limit of $105 million. We will come back to this preliminary limit in a few minutes. We will now look at how we calculate that new growth factor.
Okay. So far, so good? All right, there's going to be a few more videos, so just bear with us as we get through, because some of this material, while it's mundane and I'm passionate about it, but other people are like, fall asleep, that's fine. Go ahead, Jeremy, Assessors. I'll let Chris take this.
Okay. Hi, everybody. Chris Minchell. I'm the Chief Assessor here. I want to tell you this slide basically says what we do. You're all adults. I'm going to let you read it. I'm basically going to focus on what we don't do. That seems to be where most of the confusion with the assessor's office comes in. So, first of all, we don't raise your taxes, and we don't set the tax rate. That's actually determined by all of you through town meeting. When residents vote on what the town will spend for the year, that becomes the tax levy, as you just saw in the video, i.e. the budget. Once the DOR, Department of Revenue, certifies our property values, which they do every single year, they total the entire amount of the town and divide that into that levy. That is how the tax rate is calculated. It's not a penny more or less than what the town needs to be funded. So again, we don't decide the rate, the budget decides the rate. What we do in our office is we handle the property valuation. And to do that well, we need good data, which is why we're out in the field a lot. We visit properties when they sell, we visit properties when they have building permits for anything that's going to affect the value, whether that's an addition or a demolition. If it affects the value up or down, we're out there inspecting them. We also have to inspect for what's called the cyclical program. The cyclical program is a state requirement. We are supposed to be out and trying to inspect every property in town at least once every 10 years. So if we haven't been to your property for sale or permit, you'll see us for a cyclical visit at some point. The Department of Revenue suggests strongly that towns do a third of the town in cyclicals every year. The reason that they suggest that is they don't want you to be behind in your cyclical program when you get to your 5-year certification. If you're behind in that, they require that you hire a contractor to do a town-wide inspection program. That's incredibly expensive, a lot more expensive than having our part-time data collector. And it's required that it's completely done in your certification year. In order to have that data done, if you don't have that data done, you're not going to get your tax rate done. So it becomes a problem for towns that don't stay up with their cyclicals. It's not only a problem for that, but I feel it's a good practice because it gives us better data. And the better data we have, the more accurate your valuation is going to be. Another thing we don't do in the assessor's office is we don't do individual appraisers. Like the kind you get when you're buying a house. They use 3 to 5 comps. We have over 4,200 properties. Then we have personal property on top of that. We can't do an individual appraisal on everybody's property. So what we use is called CAMA software, again, regulated by the Department of Revenue. That stands for Computer Aided Mass Appraisal. And it's a system that helps us value properties in bulk. It's based on all the sales from a previous calendar year, and the goal is to make sure that assessments are fair and consistent across the board. That's the entire charge of the assessor's office, is to be fair and equitable. We look at a lot of factors: sale dates, neighborhoods, styles, grades, ages, condition, it goes on and on. And we run statistical models that have to meet state requirements Two of the key metrics that we track are ASR, which is assessment to sales ratio, and COD, which stands for coefficient of dispersion. The ASR tells us how close our assessments are to the actual sale prices, and the COD measures how uniform those assessments are. So the lower the COD, it means it's more fair. So the bottom line is that we don't control the taxes and we don't do individual appraisals. But we are constantly working to make sure your property values are accurate and equitable. So thank you for letting me explain what we don't do.
So answer to number 6 is COD. In case you're asking.
Giving away all the answers.
It's 50,
Okay,
it's
can I
50
ask-
question quiz, so.
Can I ask what the ASR is right now?
Yes, you can. I want to say it's 5.9. Sorry, ASR is 95%. Our COD is 5.96.
95%, so that means that you take the sale price and your assessment is 95%.
So that is the average is not 95% on the ASR. We're allowed to be, obviously, we can't have every property be 95% of the sale prices. There's too many of them. We're allowed to be anywhere between the state's recommendation is 90 to 110% of the values.
On every house or just, you're saying blanket, not just
Average.
individuals?
The entire, they do a spreadsheet in the entire thing. They want to see that everybody is between .90 and 1.10.
What if one person's off that? Because I know you guys missed the mark on my house by about $200,000 on my evaluation off my sale within a year of me buying it.
So it would be this 2 years after you bought it, because we're running about a year and a half behind. We have to give the state a calendar years of sales. In their infinite wisdom, they work on the fiscal year, but they require us to have a calendar year of sales. So for fiscal '26, we're using 2024 sales.
Yeah.
So it takes 2 years to catch up.
So
That-
I'll just ask a question, I guess. So I bought my house in 2020 for $600,000. In 2022, it was evaluated for $820,000 under the town. So like it's $220,000 over what I purchased my house for. I didn't buy it from a family member or anything. So like I
Right,
saw my
so it's
tax
not
increase
just
almost
based on
20%.
your sale, it's based on all the sales from '24.
Okay.
Which is why they continue to stratify all of those various things, and everything gets a value. So basically, in that system the state allows us to use, they continue to stratify it down further and further on, everything, like I said, from age to condition. So, a colonial that's considered this grade, that has this many bathrooms, that has this much land, it all factors in. And they should end up being overall between .90 and 1.10.
Okay.
And if they're not, then they start adjusting our numbers in the background to get them to be that way.
Okay. Yeah, I'm not blaming you
There,
like
no,
anybody
again,
individually.
there's a random outlier, but it's not often. There's always somebody that overpays for whatever crazy reason, or somebody that got some fabulous deal. There's a lot of things the state codes out as well. Sales that are not arm's length, and I was an appraiser for 30-plus years before I started doing this, and what I consider arm's length and what the state does, they code out a lot of sales saying, if there's any reason to not use it as a valid sale, the state will.
Yeah, I worked for the state for a long time. They do
Yeah.
a lot of weird things.
Yeah, they do.
Are there any definitions that have changed in your assessment evaluation, like definition of what defines a bedroom or a kitchen or a
So, no.
bathroom, or,
No, not that, no, but bedrooms people get hung up on bedrooms a lot, and that's not a big value driver. The only time bedrooms tend to be a value driver in the market is when something is a one-bedroom. But when people are very concerned a lot of times, I'm going to sell my house and you have me as a 4-bedroom and I really have 5. That's not a value. It's more square footage. The market indicates more of adjustment for square footage when you're at that size. A colonial that's a 4-bedroom versus a colonial that's a 3-bedroom or 5-bedroom, it's not the bedroom that drives it, typically it's the size.
size of
The house.
the house?
In other words, if you have a 2,800 square foot colonial versus a 4,500 square foot colonial, nobody needs a 4,500 square foot colonial with 3 bedrooms, 3 giant bedrooms. It's not the bedroom that's driving the value, the sales price changes, it's the size of the house.
another quick question. You mentioned property, personal property, when you're talking about this, that you guys assess. What, is that's just excise tax on vehicles, right?
No, that is a personal property in Massachusetts, we call it excise.
Right.
No, personal property on businesses.
Okay, just on businesses.
It would be on homes, on stuff in homes if we lived in an area that had second homes.
Sure, okay. The Cape does it on some of the towns.
Yes,
have
yes, it's
property tax.
how you chase that, I don't know.
Sure.
Because to tax somebody on their couch,
Right.
good luck with that. But yes, we don't have that issue here.
Okay, cool.
That's good.
Yeah, no, I don't want to be coming to
Because in the
tax you on
Cape,
your couch.
The personal property tax on furniture and stuff goes up every year. Instead of depreciating, it increases in value. I don't understand how they do that, but
And we do have a $5,000 exemption on our personal property for our businesses, which was, I don't remember what year it was voted in, but long before I was ever here, which I think is a great thing, because we have a lot of small businesses. You don't want to be crushing somebody that has a tiny business, an accountant that's got some desks, and, that's, we don't want to drive more small businesses out. So,
All right, moving on to our new growth. Short little video to tell you what new growth is all about.
The new growth factor is a dollar increase in the annual levy limit that reflects additions to the community's tax base since last year. Proposition 2.5 recognizes that new development results in additional municipal costs. For example, a new subdivision increases school enrollment and new businesses increase public safety and infrastructure requirements. The law sets out this formula for calculating the annual new growth factor. The extra assessed value added to the tax base due to the new development is multiplied by the previous year's tax rate. This formula arrives at a dollar amount to be added to the levy limit as new growth. Basically, what this formula measures is how much tax revenue the new development would have generated if it had been taxed last year. The added value that is included in this calculation comes from three basic categories of development. The first and usually largest category is made up of properties that have increased in assessed valuation since last year because of development and other construction activity on the site. Most of a community's new growth comes from this category. For example, last year, Parcel A was assessed as a vacant house lot for $50,000. This year, Parcel A has a new house on it and is now assessed for $250,000, an increase of $200,000. That $200,000 in added value due to the construction activity is included in the calculation of the community's new growth factor. The new structure doesn't have to be completed. For example, Parcel B is a single-family home that was assessed for $200,000 last year. An addition was built to the house, and this year, Parcel B will be assessed for $225,000, an increase of $25,000. That $25,000 in added value due to the construction activity is also included in the calculation of the community's new growth factor. The second category of tax-based growth is made up of exempt property returned to the tax rolls and new taxable personal property. For example, last year, Parcel C was owned by a private college and was exempt from taxation. The college sold the parcel to a developer, and it is returning to the tax rolls this year with an assessed valuation of $100,000. That $100,000 in added value to the community's tax base is included in the calculation of the new growth factor. The third and final category of tax-based growth is the net increase in the community's assessed valuation that results when property is subdivided or converted to condominiums and taxed as separate parcels. For example, Parcel D is a 20-acre site of vacant land that was assessed as a single parcel for $1 million last year. Since then, a subdivision plan has been approved for the site. The plan creates 10 two-acre house lots that will be assessed as 10 separate parcels this year. Under the assessor's land valuation schedule, the total valuation of the 10 lots ends up being $1,100,000, a $100,000 net increase in the assessed valuation of the community. That $100,000 in added value due to the subdivision and taxation of the land as separate parcels is included in the calculation of the community's new growth factor. The new growth factor does not include the increased assessed valuation of a community's tax base that comes from the higher market value of property. The valuation increase has to result from a change in the physical condition, taxable status, or taxable unit of a property. For example, a single-family house was valued at $300,000 last year and is valued at $350,000 this year. No construction activity took place on the site. The house is simply worth more in the current marketplace. The additional $50,000 in value is not included in the new growth calculation, even though it increases the total valuation of the community's tax base. In addition, the factor is not adjusted for decreases in the tax base due to demolition, fire, or other reasons. It is based on increases only. Since the new growth factor is based on a comparison of last year and this year's assessed valuations, it is calculated after the assessors have set all values for the year just before the annual tax rate is set. At that time, it is reported to the Department of Revenue as part of the tax rate setting process.
So that's our new growth. Key component there, 100,000. Paying attention. All right, it's about 6:30-ish, a little bit after. I know we have some snacks up here. I didn't know if you guys wanted to grab a quick snack, take a quick break, grab some water, whatever. Then we'll start right back up with the treasurer's office.
Okay. Hi, my name is Daniel Vicente. I'm the treasurer collector. Hello. If I look at my phone while I'm speaking, I have a wife at home who's 39 weeks pregnant, so I apologize in advance, but we should be okay. Thank you. So I'm just going to speak quickly about what myself and my office does. So we serve as the central financial agent for the town. Essentially, all the revenue that comes into town flows through my office one way or another. Responsibilities include billing and collecting real estate, personal property, motor vehicle excise. We also collect water bills for the water department through our office. And then we also have collection of delinquent taxes that's pursued through a demand notice at the end of the year if any taxes are unpaid, or we send out a courtesy notice if it gets to a point where the new fiscal year is starting and we still have previous taxes owed from the previous fiscal year, all the way up until starting the tax title process. That entails us sending you notice, using a deputy collector, using a constable to post warrant, all the way up until putting the property into tax title. That's just securing the taxes to the property to make sure, in the event that anything does happen, that the town can still recover the funds that are owed. Let's see. From the treasurer's side, like I had mentioned earlier, the responsibilities include receiving all town revenues, processing vendor payments, so any vendor that the town contracts with, we send checks out when we owe them payments. We also manage the payroll for the full and part-time employees and contractors that work for the town. I think Todd mentioned earlier, we reconcile with finance and all of the bank accounts for all of the cash that we have and all the monies that we have. And then we also manage the investment of town funds. So when debt or bonds are approved at town meeting, my office works with the banks in order to facilitate that debt. And that is what I have. Any questions?
We also reconcile for all the monies we don't have, because we do have receivables
Sure.
on a bunch of different items.
I have a quick question.
Yes.
When we do our real estate tax and it goes to Medford,
Yeah.
why is it not coming here? Why are we paying an
Sure.
accounting company? And one more question.
Mhm.
If you're having, how much maternity leave will you be on? And will we need to hire a temp to help your two coworkers?
Okay. I'll answer both. So the first question, there's various methods that you can pay your bills for the town. So you can come into our office to
No,
our window.
I'm saying, how much do we pay Medfed
Oh,
to
okay.
handle our?
So that's our lockbox service. So I can get that answer for you. I don't have it
I'm
right
just
now off the
saying,
top of my
like,
head.
how-
Sure.
Can we
Yeah.
save money, and why can't the checks or envelopes be addressed here?
Sure. I can get that answer for you. That we
He's gonna
do.
answer it.
We do collect a fair
Not only
amount.
do we have the ability for you to mail payments in, you can go online and make payments as well.
Yeah.
Which is fine, but I'm
Yep,
saying,
I'm
why are
just
we
saying-
going to Medfed?
Yeah.
Why are we wasting money by paying somebody else? If this town is trying to save money, we have workers here, why can't checks be processed?
Sure.
Sure.
But we can get that information for you.
Yeah.
We don't have it right now.
We do have, so, sorry. We do still receive a fair amount of tax revenue through that process, through the lockbox process. But after this, maybe next week, when we come back into the office, I can get you that answer. I have the numbers of how much revenue we pull in, trends over the past years of how much we collected 5 years ago versus this year. So it is still a considerable amount of money that comes in through
I
that.
think
for the why.
You
But I-
misunderstand what I'm saying. I'm saying we're paying a company
Yep.
to
Understand.
stamp the
Yep.
checks
We don't
in
understand.
Medford. Why can we not address envelopes to Norfolk, PO Box, whatever you guys are, instead of them going to Medford?
In that situation, the sheer amount, like I said, so the sheer amount of mail that they process on their end, that would probably require someone in our office to be sitting down and
So then you would
opening and
hire
processing.
somebody then, instead of paying what you're paying in Medford. I'm just saying, next week you'll find out what accounting company, what you pay them, and then
Yep, we
it
can get
could
that
be a
information for
full-time
you.
salary person here.
Okay.
Is the online system a Norfolk system that goes into Norfolk directly, or is that, we're paying somebody for that too?
It's through the bank, so you just process the payments, they go in, and then it's reconciled and attributable to your,
That's a Norfolk
Particular
system? It goes to-
And sorry, to answer your second question,
Yep.
no, we won't have to hire someone to
How's
fulfill
that?
my duties. I have an assistant treasurer collector, Karen Tripp, who will be filling in for me, and then also Sarah, who's here today, will also be able to help while I'm out. And then
So
I'll,
the two of them will be enough
Yep.
to handle.
yeah, and then I will come back.
That's fine, no, just.
No worries,
I didn't
no
know if
worries.
you were
That's why I
hiring
wanted to make sure I answered your
part-time,
second question.
maternity,
Yeah.
you're
There won't be an
entitled to it.
interim while I'm
You're
here.
entitled to 3 months or whatever it is. Yeah,
and if there's anything extraordinary, I'm always here.
okay.
Is there an extra charge to pay your taxes online?
So that charge, it's a processing fee that Unibank charges. It's not a fee that the town imposes. It's a fee that they charge in order to process the payment. Yes, there is.
Is it,
I just want to make one observation. I just go on my online banking through Bank of America and pay it that way. There's no extra fee.
Yeah.
I pay exactly down to the penny. Choose the date I want it to be delivered, and that's it. I don't have to think about it.
That is another one of our options. And then a lot of people do have escrow payments, so a lot of our payments come in right before the due date. So there are various options that we have. Did you have a question as well?
no, I was just saying, that's
Same
a
thing,
good
yeah.
idea.
Any other questions? And then I believe there's a video.
As we have seen, the levy limit establishes the maximum amount of revenue a community will ordinarily have for budget purposes each year. However, Proposition 2.5 allows a community to levy above its levy limit or even above its annual levy ceiling upon voter approval at a referendum election. Referenda questions that allow a community to levy above the limit or ceiling are commonly referred to as overrides. There are actually two different types of referenda questions that allow for a higher levy, however. One, the levy limit override, and two, the exclusion. They are used for different purposes and have different effects on how much a community can levy in the year voted and future years. The decision to place overrides or exclusions before the voters is made by the select board in a town or the city council with mayor's approval if required in a city. Proposition 2.5 also has a referendum type that requires a community to reduce the annual levy limit. That type is called an underride.
One more video.
A levy limit override can be defined as a dollar increase in the levy limit approved by the voters. That is, the voters approve a dollar increase in the levy limit established by the law. The levy limit override has three distinguishing features. It, one, is a permanent increase in the levy limit, two, raises funds for any purpose, and three, has limits on its amount. First, the levy limit override creates a permanent increase in the levy limit base. The impact is to increase the amount a community can levy for the fiscal year voted and in future years. To illustrate, let us say that our levy limit for this year is $100 million. The voters approve an override of $1 million. The community can now levy $101 million this year. In addition, the base for calculating next year's levy limit will become $101 million rather than $100 million. The reason is, as we said before, the override is an increase in the levy limit itself, and it is the levy limit that is the base for future years' calculations. The second feature of the levy limit override is that it can be used to generate additional funds for any municipal expenditure. It is generally intended and usually used to raise extra funds for annual operating and other recurring costs, however, which is the reason for its permanence. If the municipality wants to provide a certain level of police protection, for example, the costs of doing so are not one-time costs. They will continue into future years. The third and last point about the levy limit override is that it cannot increase the levy limit beyond the levy ceiling. Why? Because the override actually increases the annual levy limit, and that limit always has to fit within the levy ceiling. A levy limit underride is the opposite of an override. It can be defined as a dollar decrease in the levy limit approved by the voters. Therefore, an underride results in a permanent reduction in the levy limit base. It decreases the amount the community can levy in the year voted and in future years. For example, the levy limit for this year is $100 million. If the voters approve an underride of $1 million, the community can only levy $99 million this year. In addition, the base for calculating next year's levy limit is now $99 million rather than $100 million.
Limit overrides and underrides. Any questions?
Have you ever had an underwrite?
No. Sorry.
Started to ask.
I would love to. I would love to have that magic money tree in the backyard so we could have an underwrite, but unfortunately, no. All right. Oh, we're up to what my department does. Ooh. What do I do? So you'll see up here a listing of a bunch of different things that my particular office does. It's quite a few different things. Most of it has to do, obviously, with accounting. But every year, there's the production of the budget. Again, copies over there if you want to take a look. Both capital and operating. Working in conjunction with the town administrator's office, the select board, the advisory board, all the department heads, and coming forward each town meeting with a balanced budget. In addition to that, I have to maintain all the internal controls over all the expenditures, all the department heads, have to do vouchers, we have POs, there's procurement laws that have to be adhered to, contractual laws, things of that sort. As Danny and I talked about a little bit earlier, reconciliation of all the town funds. Again, his bank numbers to the general ledger, and they got to match. If not, I'm down in his office figuring it out. Also take care of all the special revenue funds. Special revenue funds include recreation, the CPC fund, things of that sort, where they have revenues that are coming in for a special purpose, and then the expenditures come out from there. Again, typically monitored by department heads. I also take care of the debt, along with Treasurer Collector's Office, receivables and cash accounts. Maintaining the general ledger. Robin will tell you this, it's always fun. We have a form, it's called the Intercontinental Account Transfer Form. Kidding, it's called the Inter-Account Form. Basically, we have to do a lot of transactions because the water department needs a revenue source going to a different department or what have you. So we'll be doing those entries behind the scenes. All of that has to have backup, which then, if the auditors ever come and ask questions, and it's always the one question that they ask on the one item that you don't have the paperwork or the backup on that they look for. So we try to minimize that as much as possible. We process all the disbursements, all the checks are run every Tuesday. Tracy hits the job, but we get all the checks processed on the vendor warrants. We do payroll warrants every other week, both town and school.
Mr. Lamont, do you take care of the fire department too? Do you oversee their budget too?
As far as...
So when we went there 2 weeks ago, the
Yep.
fire chief says he has a lot of overtime.
Mhm.
Lots of overtime for his guys, people are on maternity leave, people are not feeling well.
Yep,
Do you talk to him mid-year?
yep, so
And,
on a
because right now,
not just him, it's all the department heads.
well, I'm just saying, he was telling us how he does a lot. There's a lot of overtime.
Yep.
And he can't do away without, he can't,
It's all-
so,
primarily boils down to the callbacks and requirements as far as the staffing needs at the facility, day-to-day basis. I have a radio in my office, so, you hear one person go out to a fire call, do a full callback. Hour or two later, there's another fire call, there's a medical emergency, there's helping out in Rentham, et cetera, so.
so at the end of the year, even though their budget is this, they go low, like this is what, at the end of
Right, so
November,
we-
we have to approve.
Right. So we take the trend, when we go through the budget process, we do a forecasting. What we do is look at historical numbers. Based on those historical numbers and contractual obligations, we then come up with a number that should satisfy to the best of our abilities. In years past, it was always Springtown meeting, there would be an additional true-up, because they really never knew what they were gonna do for overtime. So it was about anywhere from $20,000 to $40,000 on an annual basis. We tried to minimize that by including a little bit more overtime in their budget, so we would kind of avoid that. What it really comes down to, well, if they don't have 4 people on staff, and I'm not a fireman, I don't pretend to be, I don't know what the requirements are. So I'm only speaking based on numbers that I'm aware of. So the 4-person crew, they dropped to 3-person because of staffing needs or whatever. Well, that creates even more problems because now you have other callbacks and things of that sort. So
Right.
now, you're not paying it here, but you're paying it here for more on the overtime.
Right.
So, and trust me, there are conversations throughout the year that I have with department heads. Rich will verify, I've had conversations on budgets, things of that sort. Building department, every once in a while, towards the tail end of the year, just have to monitor their salaries, things of that sort. But for the most part, we've gotten so much better using the trend, using the contractual obligations, dovetailing in to say, okay, what does this make sense? Because if you're gonna make a cut, it's gotta be, thought about. It's not just, take $20,000 out and we'll hope for the best of it. The thought process is, look at the trend, what has it been? And that even goes on the revenue side,
Well, that's what he said, the people that after 5 years, 10 years, they bump up to $5,000 or $10,000 more.
Yep. But
So,
we need to have the revenues too, so
right,
we need more restaurants, we need more businesses. I hear all the complaints, but with what the cards that I'm given, I have to deal the best hand every single time. And that means having some hard conversations and having those conversations with the department heads well in advance of the year end so we can make the adjustments to right the ship, as they say. Custodian of all contracts. So all town contracts, I keep files in my office for all the different department heads and things of that sort, both state, local, vendor contracts, things of that sort. And then I coordinate the town annual audit, which 2 weeks the auditors will be here. So we have the pleasure of dealing with an audit team for an entire week, and they like to buzz around in all the different offices, different information to make sure that the numbers that we're reporting on your behalf are actually fairly representative and correct. And then the statements are made. On my page, under the finance, are all the annual audits, which is all the financial statements. It also has, again, those brochures that I have over there, which is the 26 operating budget and the 25 capital budget. Again, the 26 capital budget will be prepared and ready shortly after fall town meeting when we finalize those things. That, in a nutshell, kind of summarizes what I do in my department on on a day-to-day basis. One more video.
Can I just ask a quick question?
Sure.
Just for context. Is this, obviously these videos are on YouTube. Is this typical with the way all the towns in Massachusetts, all the budgets are created? So this-
100%.
This is very templated across.
This is vanilla. We're not going off the reservation on any of this.
So Rentham, all of these surrounding towns are kind of done this exact same way.
That is correct. These videos are actually from Division of Local Services, which if you think of it in mass terms, Department of Revenue. For us, Division of Local Services is the reporting agency we have to deal with. They've done these videos, obviously, and they're just short clips
Yeah,
to
yeah.
give the information to people so they understand what the process is. And you can certainly say up, there's big books like this, go home, read, get 2 pages in, fall asleep. Whatever you want to do.
Videos are better.
All right, go ahead.
There are 3 basic differences between an override and an exclusion. The first relates to their purposes. An override may be used to raise the levy to cover spending for any purpose. An exclusion may be used to raise monies only for capital spending. The second difference relates to their impact on the current and future year's levies. An override permanently increases the levy limit and permits an increase in the levy of the year voted and the levies of future years. An exclusion just temporarily increases the amount the community may levy. A debt exclusion lasts only for the life of the related borrowing. A capital expenditure exclusion lasts only 1 year. The third and final difference relates to limitations on the amount the levy may be increased. An override cannot result in a levy limit and therefore a levy above the levy ceiling. An exclusion, however, can result in a levy above the levy ceiling. There are no limitations on the number or dollar amount of exclusions that may apply in any year. The first step is to determine the community's levy limit for the year, since it establishes the maximum amount the community can levy in the ordinary course. The basic calculation for determining the levy limit is to increase the previous year's levy limit by 2.5% and new growth. This subtotal is compared to the levy ceiling for the year and is the new levy limit as long as it is within that ceiling. Next, we would look to see if any referenda impacting the annual levy limit had been voted. We would increase the levy limit by any override approved for the fiscal year. This new preliminary limit must also be compared to and be within the levy ceiling. If an underride has been approved, we would decrease the limit by that amount. The last step is to add any exclusions that apply for this fiscal year. This total may exceed the levy ceiling. The final amount is referred to as the maximum allowable levy. A community cannot levy more than that amount for the year and must set its tax rate within that amount to be in compliance with Proposition 2.5.
Okay, that was the last video, I promise. Moving on, our department operating budget. The budget is comprised, we have the one line item in the budget, which is finance, and it's all 3 departments: treasurer, collector, finance, and the assessor's office. Salaries for all the employees is $759,480. That's for FY26. And the expenses is $227,000, roughly thereof, which accounts for a majority of all the different software services that we utilize, and then the various audit fees and some other expenses throughout the year. Funding comes from the general fund revenues, meaning, again, general fund, which is the balanced budget, so all of our expenses are coming out of the general fund revenues. Why do we exist? Well, Massachusetts general law, which when I first started here, I was told that if something seems to make sense, it's probably illegal. So Mass general laws, while they're a little convoluted, they do have a purpose, they do have a rhyme and a reason. So we have to follow a lot of different Mass general laws. Custody and disbursement of town funds, debt issuance, tax collection, things of that sort. And they're under Chapter 41, 44, 59, and Chapter 60. We also have to follow a bunch of different procurement laws as well, which is not just the accounting aspect, but also the purchasing aspect, which falls under the Office of Inspector General. Department of Revenue, I mentioned earlier, we deal with the Division of Local Services. Again, that's our agency that we have to work with, especially, come tax rate setting time and year end when we close and we get the free cash certified. And then Uniform Massachusetts Accounting System is just an accounting system that was developed a long time ago. Helps us to identify, function, what the expenses should be, basically your chart of accounts and how it should be created. And then on a going forward basis, when you're creating either new revenue funds or special revenue funds, how does that look and what the numbers should be. So if you go from one community to another community, the numbers are kind of somewhat similar, so you're not, fishing for information, going from town to town. And then GFOA, we're in the process, and the budget book has been done. There's a couple of things more that need to be finalized, so on the next iteration, we hope to submit for GFOA approval, which is just a certification to say that our budget book meets a bunch of different standards. It has all the information that you, as residents, would love to have in that booklet. So that's kind of the accounting department. Any questions?
Yeah. Sorry, go ahead.
I'm just saying, so the town administrator is your boss, and everyone else's bosses. So with the town administrator only doing 20 hours a week, how hard is it for your department to not reach out? You don't have, if he's only here so many hours a day, you really don't have a boss in-house here because he's not present. Someone is not working 40 hours a week, they're working 20, working for the fire, police. So you really don't have a boss since July.
Well, I have a boss, yeah, absolutely.
Your boss is the town administrator.
Correct.
But the town administrator is not here to oversee the town.
We communicate religiously.
Which is fine.
If there's
but
a
you don't-
problem that, again, from the aspect of department heads, most of the time the department heads are in charge of their departments and kind of
Yeah.
run with it. The oversight from the town administrator's perspective, and while I concur 20 hours is not ideal, but that's what we have, given the constraints, Mike's making the best of it with what has to happen. If there's a problem and I need to bring it up to Mike, there's an email, a phone call, there's never a skip beat in that respect, and vice versa. He needs something from me, it's right there.
Is
So-
that more stress on you that you have to finance, you need to make the yes or no decision
no
because
stress.
of town administrator?
I have no stress.
That's all I'm saying.
I know.
Todd, you look stressed.
Well, no, but if
I'm not
you
gonna
don't
lie
want
to
to
you. I
set
know
you
you don't
up
like
for
to hear that.
failure, but I'm just saying, someone not being in the building,
Right.
and you're pretty much on your own trying
And
to,
again, I think it's a temporary blip, and I'm not negating the fact that it's just the 20 hours. And again, the idea here is, we're without a town administrator full-time previously as of July 1.
Right.
We're doing the best we can during this interim period, hence the term interim.
right?
And then on a going forward basis, we'll have a full-time town administrator and back in the swing of things. Will he be able to provide me a little bit more support? Absolutely, that's just the name of the game, because you have more hours available.
Well,
He's limited at 20, we're making the best of it with the 20 that we have. Again, if there's something of an issue, Danny comes to me, Chris comes to me, so my department reports to me. If I have an issue, I go to Mike, I know where he is, I have his cell phone number. If I really have an issue, I go to the select board. They don't want to see me.
well, the town administrator is getting paid and he is your boss.
I understand.
So that's all.
Right. So right now, we're making it work. Is it ideal? Probably not. I think it will get ideal. That's just again, I hate to use the poker terminology, but it's the cards I've been dealt. So, and
Well, the town too.
correct,
It's the town.
but for the most part, I think, given the constraints of where we are, everything is working. All right, so projects.
I got a question.
Oh, no questions submitted in writing from now on? Go ahead.
So we're in FY '26 now, right?
Yes.
As of July 1st. So are there any proposed, so in the town meetings in the fall and in the spring, we're going to be talking about the FY '27 budget, are we not?
27 will be in the annual town spring meeting.
Okay.
So we will, after the fall town meeting, which is, we shortly set the tax rate thereafter, and then the new bills go out for January. Prior to that, I'll be working in conjunction with the Select Board's office to come up with the forecast, which we do a 5-year forecast. Similar to what I did in the presentation last year, it was mid-December, more likely closer to end of November that we'll probably have this discussion as far as the financial forecast. The financial forecast is to say, okay, here we are, here's what we did last year, here's what we kind of anticipate to do this year based on the trend, going out 3 or 4 years and putting those numbers back in, so then it can extrapolate out to the end to say, what's it look like 5 years down the road? You don't want to ever see that number. It's really bad. But it's just based on estimates, and those estimates are typically higher. What do we have to do? As I said, answer to number 15 is C, balanced budget. So we have to present a balanced budget every year. And that means making some hard decisions, hard choices every once in a while. You know, fire department, you want to add another crew.
Well, those are my
Good
questions.
ask, but no, it's not going to
Are
happen.
you aware of any proposed overrides or debt exclusions on the horizon right now?
As I stand here right now, no.
So, and the other issue is, you know, with these debt exclusions and overrides, they gotta kind of get, it's hard to tell how much our taxes are gonna go up, right? So, do we know, do we track how much the tax revenue has gone up if we include not only any overrides, but also any debt exclusions every year? You know what I'm saying? In other words, we're paying two pieces, right? We're paying an override if it ever happens.
Yep.
And we're also paying a debt exclusion for anywhere from 10, 20, 30 years or more in the
Yep.
future.
I can get you the sheet, what I've done.
Do we know year to year how much we've increased?
So it's part of the budgeting process, there's a page that I've included in the budget materials, which goes back about 20, 25 years, even shows the override years that was defeated or passed or what have you, and it shows each year increase.
And approximately what's that increase?
I don't have it in front of me, I'm not gonna give you a number, and I'm not gonna make it up.
Okay.
But we do have that information, I can certainly send it.
So we can tell,
For
for
next
example-
time, you'll have that sheet, so you can all see it.
So we can tell it went up from this year to that year by 6%,
Correct.
including the debt exclusion and
Yep.
any override
Correct.
together, everything together, right?
Yep. And Mike, you had a question.
Yeah, I want to address two items. First of all, the debt exclusion question. The only thing that's hanging out there that could potentially come along is Freeman Kennedy School. The school department has applied for SBA funding to put an addition on the Freeman Kennedy School. If they get that funding, then they may be coming to the town for looking for funding, because we're gonna have to put up part of that. The SBA is only gonna cover a piece of that. So I just wanted to let people know, it's nothing pending though, it's school building administration. So school building administration you can get funding for projects to renovate or rebuild schools, and they can run anywhere from, whatever million to, pick one.
It's good they did that.
So if we don't get funding, what does that mean?
Well, if you get the funding,
Yeah.
the school department's gonna we're gonna have to put up funding for the town to do that project. It's gonna be,
Right.
it'll have to go to the voters as,
So my question is, if we don't get funding from...
if you don't get the funding, it's probably not gonna happen.
Okay.
I also want to address the other elephant in the room, which is my time here. If I don't have department heads that I can depend on, that's a problem. That's a bigger problem from the town than me only being here 20 hours a week. And I will also tell you, I'm working more than 20 hours a week, but I'm not charging this town more than 20 hours a week. And I am on call 24 hours a day, 365 days a year for any of these people that need me. I fielded 4 phone calls today while I'm on the North Attleboro Retirement Board. I was down in North Attleboro at a retirement board meeting. I fielded 4 phone calls from people here today. The police chief, the fire chief, I also attended another meeting. And I'm not charging the town for any of that stuff. So I just want everybody to know, though I'm not in the building 20 hours, more than 20 hours a week, I'm certainly there for the town. Thank you.
I didn't call you.
I
That was good today. All right, next, Chris will
All right, I think I'm
talk
up.
about this.
So we are currently in our quinquennial certification, fun thing to say, with the state, which, as the name implies, happens every 5 years. The difference between this and our interim certifications, which happen every single year, and every third year, we have a third-year check-in, the state calls it. The big difference is that it takes almost an entire year to go through certification because of the level of review that the state does to our office. They do a much deeper dive in quality review and go through all our stratification spreadsheets, all of our statistical ratio studies. It's a lot. But we started our first meeting with our Bureau of Local Assessment, which is, Todd talks about the DLS being that's a division in the DLS, is the Bureau of Local Assessment, that's from my office. I started with our rep back in January to get our work plan in place and get it approved, and just 2 weeks ago, we received our preliminary certification. So our preliminary certification approval was a big step, and it's been a long year, but we are right on track to be able to get our final approval, hopefully, right after we get through special town meeting in November, which keeps us on track to get the tax rate set and tax bills out, because if tax bills don't go out, we're all in big trouble, because bills got to get paid. So that's the big thing that's going on in my office.
And in the accounting office, with recent developments on current, future, past, whatever, ClearGov we've implemented about 5 years ago, I think it is now. ClearGov is a utilization tool for municipalities to provide information to residents. We have a transparency page, which later on in the presentation, you'll see the instructions to get there. But it's off the homepage, I believe. And ClearGov also helps us, department heads, when we start the budget process, put all the information in, because it has the historical information for going back to 2004, I think, with all the META stuff that we wanted to, but we use, again, past 3 or 4 years for trend purposes. So they have all the historical information in their actuals plus budgets that they help in developing their budget process. And then once all that information is, then we start the whole meeting process, which takes about anywhere from a month and a half to 2 months by the time we get through all the different boards and committees, and then finally bring it to you guys for final approval, which then goes to set the tax rate. So that's what's happening in our office. Next screen, I'll turn it back to Chris.
Oh, no, Nancy, sorry.
So the assessor's office, this is some of those.
Oh, I'm sorry, Chris.
Business that we have going on in our office, and some of these are yearly, some are done daily, and some are done monthly. So the first one is the major one. We bring in over 70% of the town's revenue through the valuation of real estate, personal property, and motor vehicle excise tax. We process and bill over 12,000 motor vehicle excise bills and 600 to 800 abatements per year. We mail and process about 300 form of lists for personal property accounts, and we mail and process about 200 veterans and senior income and asset-based exemptions. And then we also input over 400 building permits into our CAMA system to help report on new growth to the DOR. And then finally, we inspect and verify information on 1/3 of the town's 4,300-plus properties as required for cyclical inspections by the DOR that Chris spoke about earlier.
Whirlwind of information and things that we do in this office. Keeps us busy, trust me. Treasurer statistics, I'll step out, or you want to do it there?
I'll go from here. So just some statistics from my office. Our office processes approximately 40,000 bills annually. We process about 250 municipal lien certificates annually, and we also manage the collection of parking decals, business license fees, DPW, the dump decals as well. Interesting fact, last year, fiscal year 25, we maintained a real estate property tax collection rate of 99.2%, supporting the municipality's fiscal health. So 99.2% of the real estate or personal property taxes that went out ended up being paid by the end of the year. And like we talked about earlier, all of the different methods we have to pay help with that. And then just some of the receipt numbers that we had for fiscal year 25, motor vehicle excise was a little bit over $2 million. Real estate personal property, $43.5 million. Tax title revenue. So like I mentioned earlier, if a property unfortunately goes into tax title, that secures that amount. We had $270,000 of that delinquent tax revenue come in fiscal year '25, and then finally, the water bills, we had $2 million come in for water bills.
Okay. Something interesting about the assessors department.
So the interesting thing about the assessors department is that everybody in my office, including my board of assessors who are elected, has to take the Mass DOR's Course 101. The 10 modules that are on there, they have to take it, they have to pass it. I think it's within 1 year. It's not easy, and I have said for as long as I have been in municipalities that I think a lot more people in town hall should have to take it. It's a great, it's, not to throw anybody under the bus, but I think a lot more people should have to take it. It goes through everything that happens in the town hall and how we get there and why we do it, and it's something to be said for my board members, especially who are not paid and are elected. I am very lucky in the fact that 2 of my board members were assessors are retired assessors from other towns. They just happen to live here in Norfolk, which is great. And the 3rd retired here from Stoneham, and in Stoneham, he was on the Board of Selectmen and on the Board of Assessors. So I have 3 really knowledgeable people as board members, which is fabulous. I feel very fortunate for that.
That's something interesting about the accounting department, because there's always something interesting about the accounting department. Again, ClearGov, how do you get there? On the town website, click on the Community tab at the top, and then the ClearGov or Financial Transparency. And I think there's probably a few different iterations of how to get here as well, but that's the quickest and the easiest, I think. Again, Community tab at the top, Transparency, ClearGov, it's identified there, brings you here. You see beautiful Norfolk, the information's there. Actual 25 information is being populated as we speak, but all the budgeted for 25, 26, all those numbers are up there. And hopefully you'll be able to check them out, get ready for town meeting, for fall town meeting to vote on some stuff, and then spring town meeting is the next budget cycle of 27. And then how can the community participate? I'd love to have you all in my office every day helping me out, because it'd be great. Not probably logistically correct or available. The Board of Assessors is an elected position. There are 3 members every year. 1 rotates off and 1 is voted in. So as a community, if you want to participate in the offices to help out, Board of Assessors is a viable option.
And to take that training, would we pay for it ourselves?
It's not, we would cover the cost of that. It's included, so you just basically come in, go online, and go through the course. No cost to you. 10 modules that we showed before.
So that, but
Yep,
is there a charge?
No.
Anybody can take it?
Well,
No, you'd have to be elected to the Board of Assessors or work in my office. In other words, it's through Gateway, which is the portal that the state has us use, and they monitor it. So I have to put in who's been elected to, or actually Todd puts it in, who's been elected to my board, and then the clock starts ticking, and they want to know from me when they've finished that. And it will, once you've taken it once, thank goodness, like the gentleman who took it in Stoneham, he didn't have to take it again. Because, yeah, like I said, it's not fun.
any other questions?
So Todd, did you say that you could go onto your website and find out the budget for each department?
Yep.
Historically?
Correct.
So if I want to look at the highway department, I can tell
Yep.
what the budget has been? Okay.
Ben, you got a question, I'm sure.
Actually, I
Come on.
don't right now. Pretty good.
Questions? Donna?
So we go to town meeting, we the voters, and we pass an annual budget, and then we watch the select board, and at the end, they usually sign 6 to 12 warrants.
Yep.
What is that? Those warrants that they've signed,
So
who is
the
checking that they are valid?
So the warrant is issued out of my office. The warrant is the payroll warrant. There's 2 warrants. Payroll warrant every other week, and then there's vendor warrants There's vendor warrants from the town side, and then there's vendor warrants from the school side. The warrants are basically payments of bills, the expenditures. So all the departments get in bills for electric, light, car parts, fuel, including some intercontinental transfer forms will do. But for the most part, it's all the expenses that the town has to pay, issue checks. Warrant process comes through my office. I go through, make sure that all the bills that are presented are correct and reflected to the proper accounts, because they do have to actually have correct accounts on that, and it goes as needed. And if there's a contract in play or some other requirement for that payment to be issued, and then make sure that department heads have been signed off on. Some departments, like recreation, have a board. All their board members sign off on all their expenditures. Got to make sure that those are signed off. School department has a school committee, make sure that all those have been signed off. Once that's all done, I have the pleasure of then bringing it over to the town administrator's office. Then one of the 3 select board members have the privilege of going through and then reviewing that, signing off, and then sending it back to my office for processing. And then, like I said, every year we have an audit, and they go through and they do a test, not every single one, but they do a test to make sure, are all vouchers correct? Are they identified with the correct account number? Are they identified with the correct signatures? Are they identified with the correct board that's signing for those signatures? So yeah, there's a lot of checks and balances. It's a lot of processing, a lot of paperwork. We do it.
One more question. With insurance rates going up, start in January, medical insurance,
Yep.
I'm not sure how much the town pays for employees, but can, instead of not matching, like most people are going to be paying more for health insurance, will you be doing the same thing here?
So whatever the health insurance goes up, the employees and us participate on an equal basis. So if the health insurance increases 10%, we're both absorbing the 10%. The split that we have is 65-35, so the town picks up 65% of the expense on the health insurance for employees, and the employees pick up 35%.
And what if you, with the budget being tough, what if you went down to 60% on insurance, or would you guys negotiate?
That would be requiring all kinds of communications with all the different unions, and I don't see that ever happening. Not going down, because we'd have to give up something. It's part of the negotiation. I mean, yeah, we can have the conversation, but you're the union, I'm coming to you and I'm telling you to go to 60% instead of 65. You gonna do it? Probably not. There's gotta be a give and take of something. I'm not saying that we don't.
I'm saying just less
we don't-
employees. You
I'm not
pay
saying that we don't
less
explore
employees
it.
to Pay the insurance.
I'm not saying we don't explore it,
Yeah.
but the likelihood is very little. Especially, you have to get all of them to agree to it, not just one. You see what I'm saying?
Just less employees, and you just pay more for the insurance then. I mean, that's what it comes down to.
Hey, Todd, you saw the other night that insurance, yearly insurance, they're hitting $25,000 medical insurance for
Mhm.
family.
Correct.
So what sort of break do we get because of the participation by the group? In other words, for the schools, do we get, when you're doing a 60-35, are we getting a significant break because of the number of members that we have in the health insurance?
So we're part of an inter-agreement with Massachusetts Interlocal Insurance Association, something, Maya, and through that pooling, and thank God, sometimes we're a part of it, because when we have cases that are in excess of 100,000 or 75,000, whatever the number is, it's large cases, they're taken out of the pool, so they don't hit our experience history, so that kind of helps our rates individually. But that's done at their level on a year-to-year basis. Some years we do pretty well. One year just prior to COVID hitting, we actually had givebacks from the insurance company. They gave us like a week, basically a payment off, that we then extended to the employees as well, because we didn't have to have that much, our experience was that much lower. So our rates were really good that particular year. But ever since, they've been going up.
I guess the question really is affordability.
I hear you.
I'm obviously on Medicare, so.
I wish there was a way for us to do
I
it.
just wondered what are people paying, and is it affordable?
Until we strong arm the person that makes the decisions at the health insurance company.
Is it affordable?
Yeah.
That's what I'm saying, that was my question.
Yeah, is it
It's-
affordable?
I'm in the same boat, so I hear you.
When we go to town meeting,
and we vote on certain funds that are allotted for certain things. Say if we vote a certain amount of money to go for a new truck for the highway department,
Yep.
what oversight is there to make sure that money goes there?
So, again, the oversight is through the auditors, through my office, through the department head that actually has to make the purchase. And then typically, we would have the chief procurement officer, which is currently Mike playing that role, would also be involved in that whole process. So it's not just an isolated, oh, have at it, have a nice day. It's multi-department, multi-individuals, and auditors are all reviewing all that information. And every once in a while, David's advisory board will be asking us all kinds of questions before we get approval to make sure that we're doing the right thing.
Hey Todd, what's the ability of your department, my experience working for either town or states and watching set budgets, what's your experience or oversight that your department has of when they come up and each department has extra money and they try to run through it real quick so their budget doesn't get dropped for the next year? What oversight does your department have to ensure that departments are not doing that and doing
So
wasteful
while I would
spending?
like to say I'm probably the worst no man here.
Cool, I like that, yeah.
If Chief Kinney was here, he might have even said it at the last meeting, something about he hates to talk to me about finances because every time I tell him no. So my oversight, again, I work closely with the town administrator's office, closely with the department heads. While I'm only a department head in the finance, I give good insight as to what kind of should happen, shouldn't happen. Hey, by the way, we need to be mindful about this. There's been other issues. Sometimes items get charged to the general fund by mistake, and they shouldn't be. They should be charged to the special revenue account. Then we get reimbursement from either a state representative or federal, whatever the contract is. So I'm always mindful of that situation. Again, those are typically small mistakes, but not a big deal. But as far as the end of the year, we have a lot of departments that just don't spend.
Okay.
We've gone down this process so many times. We know what their needs are. We've had the conversations. The idea here is if you do have give-backs, give them back. We'll analyze again into the trend basis to say where your expenditures are. If you need something, let's say your budget for office supplies was $1,000 and you've only been spending $700 historically. Can we reduce it to $700? Yeah, that saves us $300. But at the end of the day, next year they didn't purchase the toner that they wanted to. Now they have to purchase the toner. Now they don't have enough money.
Sure.
Those kinds of things. So we're very mindful about that. And again, that's having the conversations. It's utilizing town administrator to come down with a strong fist, as they say every once in a while, just to make sure that they're still in line with what we wanted to. There are departments, as we've gone through this process, year after year, keep chipping away at what the expenses are that they have available to them. They keep getting smaller and smaller and smaller, so the givebacks on some of the departments are negligible at best. And just consistently, there's not gonna be a lot, especially on the expense side.
Yeah, I get a lot of small departments who
There's
won't have that
salaries and things of that sort that, you anticipate. You might have some savings because you hired a new person at a lower rate. You had less overtime, things of that sort. We're all very mindful of those are never touched.
Cool.
Those are all given back. And I make sure of that.
There was my question, there you go.
Again, I'm probably the biggest no man here. We'll take a 5-minute quick break, then we'll come back for the activity. And it's about, how many questions am I up to now?
50. That was the last thing you said.
Let's make it-
75.
let's make it 100. 5 minutes, we'll be right back. All right.
Like 90 shows, 80 shows.
So, our activity, thought process is try how to get you guys involved. I didn't really want to help you guys help me with doing an audit or anything like that, because it'd be a little time consuming, probably 3 to 4 week process. So we thought it would be a little bit of fun here, do a little Jeopardy, do a little levity. As you go through, we'll start the game. Very simple, first person to raise with the right answer will win. We'll start off with picking category 1, question 1 to start, and then whoever gets the correct answer will then pick the next question.
Do we have to answer is what is and who is?
Yep, you do have to use questions. All Jeopardy rules are in play. And each winner gets a Hershey Kiss One with the most Hershey Kisses will receive a grand prize.
Chocolate, you better.
Giant one.
All right.
Finance and town budget. Aren't we all supposed to read it out loud? Like I've watched Jeopardy before. Assessors.
You've never watched
No, yeah, I have. Doesn't the crowd yell out what the thing is when they show? Collector and treasurer.
I've never watched Jeopardy before. I've never watched it.
7:30. Not 7:30.
I usually just stream shows.
Yeah, you guys don't have like cable
Or I
anymore.
watch reality TV. I don't like sometimes.
Remember, I said there was going to be a quiz at the end. I hope you wrote down the answers. All right, click on 200. Answer.
Oh, okay.
200.
Select board.
Nope.
Town meeting.
Correct.
That's right.
Actually, no. Sorry, you don't win.
Oh.
What'd you forget? What'd you forget?
Annual town.
What'd you forget?
Oh, what is annual town? There you go. Oh, I don't
You're
watch
so
Jeopardy,
close.
so I don't.
So close. Give him a piece. All right.
It's in the form of a question.
Answer, click. We'll go back to the board.
Oh, I get to pick the next one?
Once it
You
comes
do.
back. So you can
Just
pick the
click anywhere.
category and then the dollar amount.
Anywhere.
There we go.
Assessors for 1,000.
Better stay home.
I'll be wrong again, sure. Do I lose Hershey Kisses if I'm wrong? What is tax abatement?
No. You can also lose candy. No. Correct.
Yes.
We'll put a shun at the end, but we'll give you the exemption.
Oh, perfect, thank you.
And it's your choice for the question.
Oh, I'll just do assessors for 200. Sorry, it's probably both.
Popular category tonight.
Oh.
Yes.
What an arm length deal, right? What is it? Arms? It's kind of the right wording.
We'll give it to you.
Thank you.
What is full and fair cash value?
Arm like,
Arms length.
We'll give it to you. All right, you select.
Norfolk Fund for 400. Jack is that.
9.5. Nope.
What is 14.6?
What is that?
14.6?
So formally answering a question, what is, but no.
It was 96.
No,
What is 15.2 square miles?
you are correct. Point two.
I was close. But no.
And fun fact, roughly 14.8 is land and 0.4 is water. All right, next question.
Oh,
Since you cheated.
Norfolk Fund for 1,000.
the big ones.
Oh, what is the Charles River? Feeds the Charles River. Oh.
What is Populatic Pond?
Correct.
Well, because it feeds the Charles River. Proposition 2.5 for 200.
What is false?
Correct. Nice job.
Just wanted candy.
And our next question is,
Norfolk Fund for 200.
correct.
Good job, end of the question.
Jack, what is North Rentham? Fun fact, we were once called North Folks. Heads the team, Norfolk. All right. Jack, next question.
Norfolk history for 200.
1870.
Wrong.
What is 1870?
1890.
Wrong.
Where is 1870?
Correct. Gotta play by the rules. I don't make them up. Oh, fun fact, Norfolk was settled in 1695. All right. Next question.
Norfolk history, 1000.
Correct. Norfolk Community Day, sponsored by the Lions. And fun fact, this past one was 31 years in the making.
Wow, that's great.
Oh, it's been rained out a couple times in my experience. If everybody doesn't know, I'm also a Norfolk Lions member. This is a foolish plug, but that's okay. We'll all see you next June.
It's a wonderful thing.
We'll all see you next June. And I'm sorry I didn't catch you this last haunted train ride, because I know many of you probably wanted to go, but I was there. So it's good. All right. Who won that? Jack?
Norfolk history for 400. What is the town meeting? Town meeting? What is the town meeting?
What was the meeting house? I'll give it to you.
First meeting house.
Jack's running away with it. Next question.
Norfolk history for 600.
What is TED?
Wrong. You can play.
What is 10-2?
Correct.
What was that?
What is TED 2?
I knew one of them was it.
Fun fact for TED 2, TED 2 was the one with Tom Brady in it. And it was over, what?
He lived in Norfolk, according to the movie.
According to the movie, he was. He was actually in the Smith's house, which is up on Keeney Pond. Nice establishment. They did the bedroom shot from there. But Mark Wahlberg and both Gronkowski were at the residence, providing entertainment for a bunch of the residents there. And fun fact, Ted 1 has my nephew in the opening scenes as one of the fighting boys from a long time ago. So, a lot of fun facts.
Did the town get any money because they filmed in our town?
No, it's private. They were on private property. All right, who got that question?
Keith.
Dave did.
Collector treasurer for 600.
I'll give it to you. It's included. It's tax taking foreclosure. And you did say what is, correct?
Yes.
So that's what I thought I heard you say. I'm just making sure. I got the speaker right here, so I
Are you auditing my answers?
Yes, please.
double. All right, next.
Norfolk history for 800.
What is like Pondville Cemetery?
That's correct.
Nice.
Yeah. Good job.
Nice use of the word what is. Next question.
Norfolk Fund for 600.
Baptist Church.
Yes. First Baptist Church.
Finance and town budget for 400.
Oh, you don't want to go there.
What is July 1st to June 30th?
That is correct.
I had to make sure there wasn't 30 days in June for a second. Say the poem in my head real quick.
Next question.
Finance and town budget for 600.
Property taxes.
Correct.
Thank you.
And next question.
Oh, sorry. Norfolk Fund for 800.
Oh, this is my personal favorite.
What is dairy farm?
Farming.
Is that over by the,
What is dairy farm?
Dairy farm?
Yes.
Yeah, I'll give it to you. Jess got it.
Where
What
is
is
that?
Wayland's Dairy Milk Sanitation School? That's on
Boardman Street.
Boardman Street. Fun fact, while attending KP, I used to work there as a farmhand.
Wow, that place is old.
You know Mary?
And somebody here, I think it was Susan or Susan? It was Susan.
Jacob's in there.
Arsenio, she's not here?
oh, I'm right here. Sorry.
You came from Easton?
No, Simsbury, Connecticut.
Oh, I'm sorry, Connecticut.
Yeah.
Carla.
Carla.
Oh, Carla left. She was afraid of this test.
She used to ride horses on the street, and so did I. Because I was at the warehouse. and we did
You know Mary Zoldestani?
Oh, yeah, I know those oldest lines very well because I was their
Yep.
keeper. Mary and Tamara.
There was a swimming pool they put in there.
All right, who won that? You did. Your choice.
Get swimming lessons and everything.
Prop 2.5 for 800.
About 2.5, 800.
What does the town vote? What is the town warrant vote override article thing? I know what it is.
What is the town
Of
meeting
debt
vote?
exclusion. What is the debt exclusion override
What's
vote?
the town meeting vote?
What is a town meeting vote and a vote at town election?
Yes, need both.
Okay. Oh, right.
Town meeting vote and an election vote. Told you, the harder ones are a little bit harder, so.
They're good.
All right, Dave, your selection.
Oh, assessor 600.
Assessor 600. Yep,
What is Proposition 2.5?
correct.
Sorry. We give you one.
I have an
Nancy?
answer for that.
I know you want to get through it. We're almost there, we're almost there. All right, so,
Oh,
That one I did click.
finance and town budget for 1,000.
I did give you the answer earlier.
Saw that webpage.
Sky or something? Sky.
Yes, sir.
Clearing up?
No.
I thought it was.
Clear or something? No, Sky or something? Sky. Plant?
It's not only used by Norfolk, it's used by every municipality in the state.
That's something.
Something earlier.
That's something.
Sue, you want to take a crack?
UMAS.
No.
What is UMAS?
That is correct, Jeff wins it. It's called UMAS, stands for Uniform Mass Accounting System.
It wasn't.
I gave warning to everybody about questions coming up later, that's all I'm saying. All right, where do we go?
Finance in town for 800.
Jack,
What is free cash?
that is correct. Where do we go next, Jack?
Let's see, assessors for 400?
What is January 1?
Yep, that is correct.
This is late for us, yeah, for everybody.
All right, Jeff, next question.
Collector treasurer 200.
And you have to get all components, please.
What is property personal tax?
Nope,
What is auto excise tax?
nope,
What is water bill?
nope. Oh, wait, what am I? Hold on.
Here's the first one.
Which one did you choose?
I chose water bill.
No, I know that.
What number?
It was,
200.
200, yeah.
yes.
200 for what? Assessors?
Treasure collector.
Treasure.
Oh, treasurer collector. 200. Oh, I'm on the wrong one, sorry. My bad. All right, we'll start the question all over. First one to raise your hand?
Someone got it.
Yeah.
Hold on.
Yeah,
What
somebody
is
got it.
personal, what is property/personal property tax?
Property tax bill. We'll give it to you.
That's a personal.
Property tax.
What is the property tax? All right, I'm done screwing up. Back on track.
Is that guaranteed?
Sure.
Guaranteed.
Prop 2.5, 400.
What is 2.5%?
Plus growth,
What I got?
plus new growth.
Oh, plus new growth, but I didn't.
2.5% of total full and fair cash value.
Oh.
But I'll give it to you because it was only 2.5 and you didn't know the last part, so we'll give it to you. Next question.
Never mind then, okay.
Prop for 2.5, 600.
Somebody need their calculators?
Math question. What, make me do math like that?
See somebody using their phone. Go ahead.
I see my math's right in my head. What is 800,000?
Wrong.
What is $100,000?
Wrong. Can't answer yet. All right, everybody loses out on that one. What is $1 million? 2.5% of 40 million is $1 million. All right, so nobody won on that one, so I'll get to select and we'll go prop 2.5 for 1,000. You saw a whole video on this. They actually gave you the answer in the video. Go ahead.
Well, I don't know that, well, I'm probably not gonna word it right, so never mind.
And what is a new home? Bingo.
Final answer? Wrong game show, sorry. So you can go that one. What is I'm gonna give it to you. What is tax revenue from new construction, renovations, partial subdivisions, and they're finally DOR approved? So it's very long and convoluted. I wanna make these really hard so you wouldn't get them, but I'll give it to you. Go ahead, select the next one.
Collector treasurer 400.
This, you need to get all components.
What is April?
Wrong,
What is November 1st?
wrong,
What is October 1st?
wrong.
A quarterly due date.
You can't answer.
It's not what you think it is.
Well, it's definitely what you think it is. You just gotta say it.
Is it just like the
March
fourth?
1st,
It's the 4 quarters.
4 days.
You've already tried, but no.
November,
Go ahead.
there's 4 of them, right?
Right. And if you start on the right month, you'll get them all.
It's coming up in another couple weeks.
Yeah, you're right, keep going.
It's November, February,
Yep,
May,
and the last one?
August.
That is correct.
There you go.
What is August 1st, November 1st, February 1st, and May 1st?
If it doesn't fall
Fiscal year.
Unless it falls on a Sunday, yes. You're right, Tom.
There's an exception to every rule, and we have them all. Next one.
Collector treasurer, 800.
Nope,
What's 2.5%?
nope,
What is 15%?
nope,
What is a lot?
close. Give them a candy and shut them up.
It's 25%.
Nope. It's a number, pick one number.
12.
No, you gotta raise your hand. You gotta call me. Madhouse.
She's out of control.
What is 15%?
15? No, but you're darn close.
19.
Going the wrong way.
14%.
Going up is wrong?
12%.
Jack gets it 14%. All right. I think we're down to 2, 3, 2.
Yeah.
Jack, which are the last two?
Annual.
Assessors for 800.
So it gets split out.
Okay, that's not all.
music.
Gave you this answer.
Go ahead.
Every 3 years?
No,
10.
It was every 5 years, the quincentennial.
that's correct.
That word.
Quinquennial, but yeah.
Quinquennial.
And our last question of the night,
So every 3 years they go through all of it.
treasurer collector for 1,000.
What are bonds?
I'll give it to you. What are municipal bonds or notes? Because bonds could be construed as corporate, et cetera, et cetera. So that's our game. I want to say thank you for coming.
That was good.
Want to address any questions you have here. There's going to be some items coming to you for your next meeting that you're going to have. Anita will talk about that in a second. I will give you the year-over-year rate increases for the budget as part of the budget materials that we have as part of our transparency for information for everybody. So that'll be included in the package as well, as maybe another piece or two. You guys have all the slides from here. The slides will be posted on the website under the
Hold on, it's gonna.
tab there.
Questions?
Oh, yeah. By the way, who had, what are the numbers for
If you ate them,
chocolate?
it doesn't count.
Seven, 8.
7 and
I
8.
took 2.
8? 5? Anybody else have more than 5?
No, Jeff
I
is
know.
Just got 5.
Jack's got 8, you got 5? All right, you guys forgot grand winners. What?
Jeff, do you have 5?
He has 5 too.
Well, he can have it, because I gave him my chocolate away.
Oh.
Thank you for playing. Thank you for
All
playing.
right, well, there you go, and I get these chocolates.
Before Anita goes, I'd just like to say a quick thank you to everybody for coming. And for those of us who don't like public speaking, I'd just like to stay in our offices and do our jobs, for being so gracious, because we don't like public speaking. But I'd also like to thank all of the finance members that are here tonight. Most importantly, Todd, for doing the yeoman's work on setting up all of this. As you know from our presentation, my office is in certification, and we are so incredibly busy. We would not have been able to get this done.
That's not to say that I'm not incredibly busy. That's just to say, Fridays and Saturdays see me here a lot.
Yeah, so I want to thank Todd for everything he's done, but I want to also thank the rest of the finance staff for their input, and more importantly, for their time, because I'm not sure if anybody is aware of it, but we don't get overtime, we don't get paid comp time, so all of the finance staff that's here today has already worked a 10-hour day today. They've already worked a 40-hour week, and in some cases, more than a 40-hour week. So they all came out tonight to support something that they've never done before, that's not part of their job description, just because they wanted to make this work, and I really think, I want them to know that we really appreciate them. And thank you to Anita for dinner, and I made Congo bars, so there's sweets on your way out, make sure and have.
Any questions? If you do have questions and you don't have them right now, if you think about them later, you can obviously email them in, include them on the little sheet if you don't afraid to ask or whatever. Questions, we love questions, we love getting you answers, as you know, so.
Absolutely. So do the evaluation forms, please. We'll put the box, you can put them on the back table, do the evaluation forms. And next Thursday, we're at the senior center, and we're talking about the senior center, veterans, and CPC.
And the town clerk.
And the town clerk. So next Thursday is at the senior center. We'll see you there. Thank you for being here. And please take some food on the way out. There's lots of food.
28 Midway Branch.